I think, to see the number of contracts added as the month progresses. And, it's up 5, 6 times. That's unusual because normally the first day of delivery, those that are going to stand for delivery do so. Now, when you do it later in the month, it's not as obvious, I guess, is the way that I would look at it. The first day notice for April deliveries, remember, first day notice, considering that in just about every month we've seen the first day notice is much smaller than what we see by the end. A big first day notice in gold, 10,138 contracts. That's 1,013,800 ounces of gold delivered. And 1,181 silver, which is 5,905,000 contracts were delivered the first day. That is a very big deal done again. And to me, it's from a standpoint of gold and silver, it encapsulates everything that you and I have talked about since 2020, when you were the first person that I really hammered home what I was noticing in 2020 then as the deliveries, as being way different than anything we'd ever seen. And it's a trend that I was fortunate enough, I guess, or lucky enough to stumble on and grab onto it and watch it, because that to me is the difference. And I never understood it when Jim Sinclair used to say, this is how you win. You stand for delivery. I had a local financial advisor in Minnesota when I lived there who would follow Jim Sinclair and told all of his people to stand for delivery. And I laughed about it because he had all these clients who had 100-ounce bars of gold, subsequently ended up trading them into coins. And I thought, well, that was just a huge pain in the butt for the clients. And it didn't amount to anything. And when you're in the middle of things, when things are normal, right? When trust is abound within a system, you don't see it. Even though someone's telling you, but this is how it happens, you don't see it. You dismiss it. And I think everything you could argue centers around trust. I mean, empires don't usually die like that. I would argue they die when trust openly leaves the room, quietly leaves the room, and openly. And I think people need to understand that the reserve status for the United States is all about trust. It's built on one thing and one thing only, above all else. When we closed the gold window in 71, it's trust. And trust in institutions, trust in country, trust in the shipping lanes, trust in the country being not only neutral, but the stabilizer of the system. And this is how we took over for the pound sterling. We had the balance sheet, we had the gold, we had the military, we were trusted. We were on a moral high ground then. Greatest generation ever. I was a young kid starting in this industry, talking to people your grandfather's age, Dunnigan, and they were amazing people, an amazing generation. It's hard for Americans to realize that because everything we do is valued in dollars. If you grew up as a kid in Europe where every country was a different currency next door, just like states here, you understand valuations and you understand that prices are not measured arbitrarily. And when we measure things in dollars, it's very difficult for people to understand that until you take a step back and use gold as the measurement stick instead of dollars. You'll find that all prices are falling in relation to gold, but in dollars, they've all gone up. I mean that. I think that that's what this system is, and it's very obvious to me. It's simple, and it's obvious, and it's clean. This is all about a lack of trust, man, and it's accelerating. In fact, this time, it almost the treasuries are being sold and is being purchased by the big money through these rates have gone up, which is difficult for, I think, people to comprehend who have been, mainstream dollar bulls and analysts forever. The public, the big money are diverged. The big money is owning gold and selling treasuries. The big money sees things clearly. The little guy doesn't. The little guy is still all in equities. They're all in traditional systems, in the banking system. They don't own gold and silver because, well, gold's too high and silver's too volatile. But that plays right into the hands of whoever the hell is standing for delivery at levels no one's ever seen before. And it's an easy manipulation for these people if that's what they're trying to do. Who are these people? I don't know. people with a lot of power and a lot of money and who aren't using margin to stand for delivery, who see things very clearly. And if this continues, look, if we walk away from the Straits, and now you got Trump saying to England and some of these NATO countries, in particular England and France, go get your oil yourself, and get some courage, go find some oil yourself. The rhetoric is getting divisive. This isn't an environment where we would expect good things to happen to the dollar, because if we leave and they're still in control, the dollar hegemony is dead, and the belief that you will be protected by the United States after Afghanistan, then this, or look at Iraq, we go in there, we destroy everything, here comes ISIS, and we're still there 22 years later. The world does not believe in the dollar system, the petrodollar system, where we exchange protection and shipping lane safety. Well, what shipping lane? We're the most powerful military in the world, and the straits are still closed. So I think the whole system is being questioned. I really do. And you can see that the world is preparing to trade in their own currencies and settle imbalances in gold, period. If you don't see that, you're missing the biggest picture ever. When you see this, the Asian countries, which are 800 million people, twice the size of the U.S. and China's largest trading partner by far, sign on to the SIPS, the Cross Interbank Payment System, not SWIFT compliant or compatible, and settling imbalances in gold, what more do you need to see? But this is just the icing. I think all of these countries within the BRICS infrastructure, that is what they are setting up. That is the whole idea behind the expansion of the Shanghai Metals Exchange. The world is accumulating gold and silver. The public is still here in this country, still under the same belief that everything's going to return to normal.
We're pretty close to a bottom. I think we probably have already made bottom a week ago, Sunday morning. Sunday night, Monday morning. You got gold down to right at 4,000, and you had silver at what, $61. I think they ended the day up on that on Monday. But it looks like the bottoming process. It's happening. Whether we've hit absolute bottom or not, I don't know. But once this thing bottoms, I think you're seeing, because of the physical demand, I think you're going to see much higher prices, and I think new highs by the end of the year anyway. The biggest difference is the physical demand. I mean, you can see that on the exchanges with the inventories getting hammered. You can see that where refiners can't keep up, and you can see it with central banks have been buying. Although I will say part of the reason you've seen softness in gold is there's been a systemic margin call, if you will, and what's been sold. Gold is one thing that's been sold to raise cash to meet margin calls. So yes, it's a hedge, but also it's a piggy bank. Yeah, I don't think average normal people. That's not where the firepower is going to come from. They're going to see institutional money come in, and at some point there's going to be real fear out there, and fear is a much greater emotion than greed. Certainly. And also remember, on these paper exchanges, the leverage is to the downside. So if there's margin calls via fear, it'll be shorts being forced to cover it, in my opinion. I don't think it matters. I think longer term, silver's going to outperform gold simply because of the ratio. It's still over 60-1, and it comes out of the ground at 10-1. I mean, even if we don't get back to the historical number of 16-1, even if we get back to 30-1, it's still, silver's going to basically double the performance of gold from here. Now, you have to pay attention to the industrial side. I mean, that's the story. Industry, the solar industry, medicinal uses, technological uses. There's so many more uses today than there was 10 years ago. And that's a big part of the offtake from the inventories has been for end uses. There's no way to tell. I mean, we're so far out, and we have a war going. We have two wars going on. And obviously, war uses commodities. War disrupts supply chains for commodities. So I think commodity prices are going to go higher, and I think inflation is going to go higher, and I think you're going to see interest rates all over the world go much higher. And that's a problem because the financial system is so leveraged. A credit crisis, a currency crisis. Um, you have to understand that financial markets, including stocks, are grossly over levered. And when that leveraging